Let's talk technicals with Katie Stockton, Fairlead Strategies founder and managing partner, as well as a CNBC contributor. Hi.
Hi.
Thanks for being here this morning. The counter trend signal that you had seen in the S&P, that I guess that was like, were you on about a month ago, 3 weeks ago? We were in a little bit of a pullback. That's been sort of solved on the upside for the S&P.
You know, it hasn't quite resolved yet.
Almost.
We're very close to that.
Yep.
Where that happens is actually on a strong open above 54.40. So we've been using that as a bit of a stop loss on the upside. We've recommended hedging strategies for the past 3 or 4 weeks or so, and we still feel like, you know, we're comfortable with that, noting that these same signals, these counter trend signals from the DeMark indicators, are super widespread among the semiconductor stocks. And of course, that has been almost the sole source of leadership here lately.
I was around for a lot when I was a stockbroker. In '87, there is something called the calm before a storm. And here's the journal today. Exceptionally low volatility in the stock market prompted some professional investors to warn the current conditions may be the calm before the storm. And here's what it looks like. For some reason, I just have this, I don't know, and I mentioned it before. Yeah, I have a sense of foreboding about things, because it's been just it's sort of a move higher without even the slightest idea that we might.
I think we have to keep an eye on the VIX, right, to that end. And we have definitely been in a low volatility cycle for now more than a year, which is about kind of average, right, for these cycles. So we've been calling for a move, even if we don't see this near-term pullback that we're looking for, out of this lower volatility cycle into something that shows more corrective phases, just more volatility. And the reason for that is that support is intact, 11.8 on the VIX. And there's been incremental improvement in not improvement really, but momentum has shifted behind the VIX towards the upside. And even this morning, you look at it, it feels like it's about ready to move higher. And I think that's what you're feeling.
Well, yeah, it doesn't. VIX isn't going to move higher if the market spikes higher. It's going to move higher when it.
That's right. So especially if the VIX clears its 200-day moving average, which I believe is right around 14.5, that to me would be indicative of heightened risk near term.
So the Dow is not. The NASDAQ has been unbelievable, and so is the S&P.
Yeah.
After, like, Bitcoin's is going to have trouble going higher if there's only one cut. It's been wanting, obviously that's why people buy it, because they think the Fed's going to go hog wild again. But why is it diverging from the NASDAQ? Why is Bitcoin
this is interesting. I know it. I wrote it up this morning.
You did?
In fact, yeah. So we've been watching Bitcoin because the correlation to the NASDAQ 100 has been increasing back to levels that we haven't seen since like 21. And to me, that's interesting. It does show that now investors are treating things as a risk asset broadly, right, including Bitcoin, including equities. So when we see Bitcoin pulling back in that framework and the NASDAQ 100 just forging higher, that concerns us to some degree. Just short term, we still believe in this bull market cycle for both Bitcoin and equities. But we do sense that divergence is something that will ultimately probably catch up with the NASDAQ 100 index as soon as people say, well, wait a second, NVIDIA's maybe a little bit overstretched here.
Okay. What else in terms of, commodities have been interesting, the yield curve. So now, were you expecting this drop in the 10-year?
We've been looking for sideways to lower from Treasury yields, and I think we're getting that. We have what looks like a pretty significant lower high in place. Support for the 10-year is around 4.13. We do think that will ultimately be broken, but we don't think it'll be broken in dramatic fashion. So more sideways to lower. That would theoretically be more conducive to a bull market cycle for equities. But we think that bull cycle, while it will persist, we'll see more corrective phases, and therein probably be a little bit harder to navigate.
Lower yields could come from a break in the market, though, couldn't it?
Could also. In commodities, I agree. They've been super interesting. Copper is down about 14% off of its recent high. It's a pretty major retracement, but the retracement follows what were massive breakouts for gold, for copper, and others. So we're seeing the retracement as counter trend now for commodities and ultimately looking for an entry point there. Not quite there yet. Crude oil does seem to have an oversold reaction. That's sort of
Is there any reason to look at the Dow itself, the Dow Industrials?
Well, it shows a different sort of cross-section of the market, right?
Yeah.
And anything that is more cyclical has underperformed.
Yeah.
And you can see that in the pullbacks. You see it in equal-weighted benchmarks. You see it in anything smaller, mid-cap. And those pullbacks still look like they have room from a momentum perspective. We have most of our indicators suggesting that we need several more weeks of either consolidation or of a pullback to get out of this mode.